I'm finally revealing it. A trading setup so accurate, it feels like the market moves to your will. A strategy with a high win rate, no guesswork, and pure consistency. After years of refining, testing, and trading, I've engineered my most reliable system yet, the A+1C method. A real mechanical strategy that I depend on when money is actually on the line. Even if your psychology wavers and even if your analysis is average, this setup guarantees you a high grade trade day after day and trade after trade. So stick around, because at the end of this video, I'm going to break down a real trade I shared with the Novo Legacy community, and I'll show you how you can get the exact same moves. And just to be clear, this isn't another theory. This is backed by real data. Over 25 trades with an 84% win rate and 5,000 in profits with an equity curve that is steady and controlled. This is a system that I can always rely on. Now I will show you exactly how to time each of these trades with surgical precision using one simple candle that is guaranteed to print every single day. I will then show you how to filter out the noise and only look for premium setups. I will then show you how to cut the unreasonable clutter out of your system so that you can stop second guessing even when price looks unpredictable. I will then give you my exact entry and exit rules so there's no hesitation when it's time to finally pull the trigger. And most importantly, you will learn how this system gives you complete clarity and confidence in every decision. Because in this industry, your decision making is directly tied to your income. So every move you make must be backed by systems and not emotions. And finally, I'll walk you through a actual trade I sent to my community and students. This is where it all comes together. Now, this simple but repeatable process all starts with my time frame alignment. I firstly open my blank chart on the daily time frame. I then delve into the 4-hour for introspection, and lastly, I go into the 5-minute time frame for my entry. I will show you the bias all the way down to a trade in this video. The very first thing you need to understand is your liquidity share that is dispersed around various highs and lows in the market. So now, once we have identified our liquidity share above the swing highs and lows, what you're specifically looking for is for price to take out one of these points. So I'm going to be looking at this on your daily time frame. If you see that price has taken out a daily high of some sort, what I look for is to scale out to the 4-hour and look for a specific kind of formation where it will enable me to enter on a reversal on the lower time frame. So like for this, price takes a 4-hour kind of high, and then we start to drop down and target the next low hanging fruit, which is going to be your draw on liquidity at the lows. Conversely as well, if price has taken your low buy side first, okay, that liquidity share is now eliminated out of the market, and the rest of the liquidity lies at the highs over here. So we're looking for price to now scale down up higher here. However, we need this to be confirmed by the 4-hour candle. So if you see price takes out a 4-hour low as well, that's extra confirmation to look for reversals to the upside. Okay. Now here's an example of this. As you can see, this is our liquidity share, our daily high buy side and our daily low sell side here. Price scales up and down within this area up until it finally sweeps out your daily low. From this point, since the liquidity share at the lows has been extracted out of the market, you're now solely focusing on price reaching the underlying liquidity at the highs. So you can see right here, there's a very strong impulse move to the upside from this. Okay. Now here's also a bearish example from this. We see that price takes out your daily high, the buy side taken out, and I also added with that, you can see that price also takes out a few 4-hour candle highs right here up until it starts to finally reverse and distribute to the downside here. And where is price looking to target next? It is that lows where your sell side liquidity share is placed at. Okay. Now wonderful. Now there's also a very neat technique where there'll be certain scenarios where your daily time frame data can be summarized into a few candles. Like this example, this is your daily high, here's daily low. So now once again, once you've identified your previous daily high and your previous daily low. You also see that this data can be summarized into a single candle, which optimizes into your candle range high and your candle range low. And this should start seeming very similar to our CRT schematic. Similarly, you can see that price makes a sweeping candle and then a distributive candle, right? This is sort of moves and candle formation I'm looking for on my 4 hour specifically. So once again, start on the daily. Here's your external daily highs, okay? That gets swept out. And on the 4 hour, you see this specific candle formation with price ticks to the high. And you look for price to actually close below this high point, as well as in a bearish scenario, if price takes out a daily low, you're looking for it to come close back above that daily low on your 4 hour time frame, while also taking out the previous candle. From here, as you can see that now price, once it has fully closed below, sweeping out that previous candle, it then finally distributes, and this way your 1C method comes into play, where you're looking to trade a distributive candle that is now targeting all the low resistant liquidity which is residing at these lows. And similar to this, we also have daily low taken out, and then candle closes above the daily low, takes out the previous 4 hour candle low, and then we start to distribute. This candle is where your 1C is happening, okay? This massive candle is where you're looking to start to trade the move upside and targeting these low resistance liquidity, okay? Now, here's a few candle formations that I mainly focus on. Now, for context, you also understand that in a standard day, there are 6 4-hour candles that are printed daily, which scale from your 1 a.m., 5 a.m., and 9 a.m. However, on some brokers, you might not see these even numbers for your 4-hour time frame. You might see that it relays even numbers such as your 2 o'clock, 6 o'clock, and 10 o'clock. Now, these essentially mean the same thing, just brokers having their different preferences of scaling down their time. So 1 a.m. translates to your 2 a.m., 5 a.m. translates to your 6 a.m., and your 9 a.m. translates to your 10 a.m. Now that we understand that aspect there, moving on from this is 1 a.m., 5 a.m., 9 a.m., and then 1 p.m., 5 p.m., and 9 p.m. Those are 6 candles that rotate throughout a 4-hour time frame, okay? These specific ones I focus on are only the AM candles, okay? Moving to type 1, we have a 1 AM candle being set by your 5 AM, and then the 9 AM making a distribution. This is what we usually look for in an ideal setup, where it takes a daily high, shows us this 3-stick CRT type 1, and then pushes down lower, okay? However, sometimes the market is not always that perfect. However, you want to be able to adapt to that. So we can also see that we have the scenario where price takes out a high and low all in one candle. Here you can see price sweeps the high and also exactly sweeps the low. Or in another scenario, you see that price really distributing and the wick is the one that makes the major push above, and then price starts to continue lower. These are the 3 main types of CRT or candle mechanic formations I look for on my 4-hour. On the 5-minute time frame, I'm looking for a very basic entry model, simply a change in state of delivery, and then I'm looking to enter off of any breaker block that is produced from that. So as you can see right here, I'm using the wick low. You can also opt in to use just the candle body as you change the area, but this is a lot more conservative, which is why I like that, okay? However, the main thing is to fully confirm your entry with zero hesitation. You need to see a candle close, because price can easily just liquidate this point if it's only a wick below. As I said there, we need that candle close to confirm our chain is their delivery, entering of the breaker block, and then targeting lower. So I can see once again, here's our candle close below our high low, and then price retraces the breaker and then starts to distribute once again. So this was the CR candle range from yesterday. As you can see on gold, we had our liquidity share at the buy side high and our liquidity share at the sell side low. And what happens, price first takes our sell side. So obviously from here, we're looking to target up buy side. So we're going to delve into how specifically we position ourselves to be on the right side of the market and also execute upon this bias. So starting on our daily time frame, we will first start marking out our liquidity share amongst our daily highs and lows. Now this is the most relevant daily low that has recently gotten swept, and as you can see, the buy side liquidity share is left untapped. So we will see price possibly moving all the way to these highs for our relevant bias. Now that we have confirmed our bias, I jump down to my 4-hour time frame. Now on the 4-hour time frame, as you can see, the relevant areas I'm actually focused on, the most recent one is my 5 a.m. 4-hour candle. Now you can see that the highs and lows are already marked out. I will now go on to the 5 minute time frame to wait for a sweep. Now, as you play this forward here, so a day like this, people would see this as a low probable day for bad conditions. But since we're using the range, this is the perfect scenario for us because price is now creating areas of liquidity once again that we can see getting taken out. So I can actually see that this holds a lot of sell side liquidity share that we want to see get taken out. So wait for that firstly. So we get our first sweep of our 4-hour candle low point, as well as a sweep of our sell side liquidity share. Now, where's the next low hanging fruit? It is these untapped highs that we are looking to target now. So that being said, we want to now look for a change in state of delivery for a relevant entry, which we are currently getting right over here. We want to see this candle close once again bullish. So right here, there we get that relevant candle. So now that being said, we will enter our trade right over here. This candle, stop loss just below this low point, and then we're targeting our candle high. Now, to fully confirm all our entry, we're going to make use of the volumetric info. So pulling out our price action toolkit, and as you can see, we now are getting reference to the various volumetric info. We can see that we're having less volumetric info on the sell side. We only have 19% at this order block. So we can see that bullishness is starting to take home advantage. This is the relevant areas that we want to start entering at. And once again, we also do have this area of liquidity that is also being left as low resistance. So now fully understanding our volumetric info, our bias, we can also enter this trade. Now, very simply, this is our A grade setup that I take daily and that I shared with the community. Stops at the lows. Now we let price play out here. And as you can see, simply like that, price plays into our TP. Now, if you guys want full access to how I trade this every single day in our live stream community, you can click the first link in the description to get not only access to my checklist, but also to my full free candle mechanics ebook that pertains this 1C method.